Good day. We've got CEO Sebastien Mailhot, CFO Daivid Montpetit of D-Box Technologies joining us today. D-Box just released its results for the quarter ended June 2023, and D-Box is a developer of haptic entertainment and simulation systems. It's Friday, August the 11th. I'm Martin Gagel with Market Radius Research. Please remember this is neither a recommendation nor investment advice. We're here to learn about the company. Sebastien, Daivid, thanks a lot for joining us today. Welcome back and congrats on posting another solid quarter. Let's see the presentation.
Thank you, Martin. So hi, everyone. And Martin, thank you for having us here. Always a pleasure to be there. So we'll start, of course, that presentation to discuss our latest release. So our Q1 of June 30th, 2023. So like usual, we start by the obvious. Of course, as you know, all those disclaimer about forward-looking statement and remembering that all dollars are in Canadian dollars except identified otherwise. So near record quarter, I think that slide speaks by itself. So we can see all time we are either one or two on most of the financials, being total revenue, right for use, gross profit, adjusted EBITDA, and net income. This has been a tremendous quarter, both in terms of total revenue, margin, and as well on profitability. So a bit of specifies. So as you can see, total revenue grew 47% to 10.5 million, and our sales of system were up 73% to 7.5 millions. And this growth came from both our segments, so the entertainment segment as well as the simulation and training one. In the entertainment market, the self system has grown to 44% to 4.5 million, driven by theatrical, gaming, and racing. And our professional simulation system sales grew 153% to 2.9 million, driven mostly by the growth in the transportation industry. A record quarter as well on the right for you. So first time we reached the 3 million mark. So this one increased 8% to 3 million. Of course, using that Q1 our comparable movie slate year over year. So of course, growth is interesting, but we always say to deliver profitable growth. So again, you can be seeing all those financial that have been improving and importantly. So you can be seeing that the gross profits increased 31% to 5.6 million, while the gross margin as a percentage decreased to 54% from 62% to the market mix. It's explained mainly, but of course the system sales has a lower margin than a right of use, explaining that decrease in terms of percentage. Again, adjusted EBITDA is up by a lot, so it's 108% to 1.3 million. It's been driven by two things. Of course, it's been increased by the increase of growth coming from all sales, but as well by a decreasing of percentage of our expense from 54% to 44% as a percentage of revenue. So profitability driven by the growth and as well by management of the expense. And yes, ladies and gentlemen, we have a net income of close to $100,000. So we're really happy to have that, and it ultimately to be profitability as a whole for the company. If we look at the momentum, it's important to have a good quarter, but we're looking as well about how we trail that. So if we look at the last trailing 4 months, we're happy to say that we are reaching on the revenue side 37.5 million, which is the best 4-quarter consecutive ever for D-Box. And as well in terms of trending, the adjusted EBITDA is at 2.4 million. So again, the trailing 4 quarters, the best 4 consecutive quarter in more than 4 years. So yes, a great quarters, but the trends are there both in terms of sales and on profitability for the continuity of the business. So this is the summary, Martin, of our financial section. So I'm sure you have questions and probably as well all the people that are attending that webinar. So I'll make a pause to capture some of those questions.
All right, Sebastien, thank you. First question we hear from the audience: how much of the 4.5 million of entertainment sales was to the theatric market? I guess selling them the seats initially. Can you make any comments on that?
We'll cover later the number of screens that are rented, but we don't give the breakdown by those sub-segments. But we have the next slide providing the number of screens that has been installed.
Gotcha. Okay. That's very solid EBITDA you've for the quarter and for the last 4 quarters as well. Should we be expecting similar EBITDA margins going forward?
As we mentioned in the past, Martin, the profitability, this one is a strong one, driven, of course, by the right for use. But we mentioned specifically that we have an objective to be at a 10% EBITDA level, which was our first target, and the last quarter was around 12.5. So yes, we can expect some ups and downs in the profitability based on the right of use that has higher margin, but we should be trending around good quarters to come, of course, as a continuity of quarters, as there's some timing and expense sometimes.
All right. Can you do any additional breakdown of revenue and then also by gross margin, maybe even by like ballpark, what kind of range is the rights and rights of use revenues versus the straight hardware sales, just like within a range of, we can do some rough math given your revenue levels and margins, but is there any insight you can give us on that?
Martin, the only thing I would repeat is what we said in the past. So no, we don't give breakdown about those sub-segments. We don't have a specific thing. So gross margins can range from 30% to 65% by industry and by sub-segment, depending on the business model. But that would be that we were provided. And of course, you see the average that we're having as we presented the total financial, but no specific one on this one.
Gotcha. This question is probably more for Daivid. On the foreign exchange front, I presume most of your transactions are done in US dollars, converts into Canadian dollars here, your input costs and revenues. Can you give us some sort of insight on like how much a fluctuation in the Canadian US exchange rate, how that impacts DBox's financials?
Yes, so of course we edge a little bit our US dollar. Of course, we have a natural also edging with buying in the US and having some revenues also in the US. I think in the Q1 we had a positive impact from the US dollar compared to last year, but it was more around $50,000 to $75,000, the positive impact on the result within the quarter. All but right. Of course, we are impacted by the fluctuation of the US and the CAD on a daily basis, as everyone in the world.
Yeah. Okay. You increase in the notes. You increased your spending on R&D as well, despite including giving you good EBITDA margins as well. And you said it's on new actuators and software. Are you becoming any more of a software company, or can you just talk about the direction of your R&D and what sort of fruits that could provide in the coming quarters and years?
Yeah, so what I can provide is in line when we did the financing round in March 2021, if my memory is correct, right? The company right now definitely makes money is a mix of hardware sale, right? Instead of the monetizing of haptic library, of software library, such as in the theatrical industry. So right now, of course, it's mostly sales of software, but yes, we could anticipate, as we mentioned around the years, that the value is DBox is to provide haptic experiences, being linear experiences as movies, series, gaming, etc. So yes, we could expect a growing part of revenue, which would be more licensing, software, recurring subscription as a percentage of total sales in the future. But of course, it won't be changing dramatically in the next 1 or 2 quarters, but over 3 years, we should see that trend.
Okay. in the past, although these last 4 quarters, things have strengthened and more consistency with your portfolio approach to your business. Is there any lumpiness we should expect, or should that be expected out of the from investors? And as well, this movie business has seasonality to it. Is there any from your equipment sales? Is that going to be impacting, let's say, Q3 more because of Christmas buying? Or can you give us any insights onto what sort of seasonality investors should be expecting out of D-BOX?
Yeah. So first thing, I think the best way to see D-BOX, and I'll put 2 points, and I think that will put the whole picture is to look trends over three quarter or 4 quarter, right? First, in theatrical, as you just mentioned, Martin, there's 2 quarters usually that are stronger in terms of tickets, our Q1 and our Q3. So it means from April to June, and usually from October to December. So definitely these one, as you were saying, that the lumpiness, but they're not consistent, even if they will continue to grow as a trend. Secondly, as well, as you know, we're working with a lot of reseller. So being theatrical, like as you said, we sell our system to integrator, to reseller, or theatrical. So of course they buy those system by bunch. So someone can be making, I don't know, a $250,000 order, not order the next quarter, and buy another quarter specifically. So of course we would like to have the more stability as we would want, both for our shareholders and internally as an executive to manage the business. But that's where sometimes you need to follow the general trend over a couple of quarters around that. But we're building a footprint of partners. When we mentioned during the year that we had multiple now $1 million partner more to give more stability and visibility on the business. But yes, there might be some ups and downs between the quarter, both in system sales and both in recurring.
All right. Let's see, we have some other questions. Can you give more color on the $2 million credit line that was drawn for payables?
No, not necessarily additional color to it. I think that we have timing sometime in payables, and that quarter was this way. So there's no specifics or different things that happen this year compared to last year. So it's just timing of purchase, inventory, stuff like that. So there's no additional color to give to that.
All right. There's a comment here on your income statement looks good, and questioning how the cash flow sort of aligns with your profit and loss statement, and I guess maybe in terms of inventory buildup or that.
I can answer that, Sebastien. So when I look at this quarter, yes, the net operation was negative. But again, as I mentioned in my previous answer, it was more about timing. So the operation before working capital is positive. So it's been positive for a couple of quarters already. Again, it's a question of timing between timing of payables, receivable. When you look the nominal value of the inventory and the receivable, they're down compared to March. I think we continue to do the good work on this thing, and we went through the COVID, and I think we continue to manage clearly the cash as very efficient. And knowing the market condition right now, we are more careful than before.
All right. I'm just going through the questions here, seeing if there's any other financial ones. I think we've hit the main topics on that. Before we move on to the sort of business review side of things, is there anything else you want to highlight for the financials, gentlemen?
David, you have something to hide?
No, I think that on the balance sheet, I just mentioned a couple of things about inventory and receivables. So on the financials, there's, as usual, there's nothing really specific or go in detail.
All right. Thank you.
So let's move to the next slide. So you had a question that was a bit around theatrical, if you don't know breakdown. So here's are the number of screen that has been added with our exhibitor since the start of the year, 71. Now, so it means we reach 856 number of screen, and still have on our radar are 1,000. So for us, there's 2 things we are doing to support theatrical, because as you know, the more we have the footprint, more we have number of seats, the more we can have additional recurring, is definitely to continue to expand our exhibitor base and as well our studio relation to get content around the world, which is relevant to drive those one. But we like where we're trending, and we want to reach our 1,000 level as soon as possible. So Q2, so even if we said, and it was related, Martin, to your question, that Q2 is usually a little bit low, we have strong titles that are there to support again in a good Q2. So everyone heard about the Barbie Mania. So yes, Barbie was in D-Box. And as people looking and people will say, what the heck? I'll just provide on this one quickly that because we have information for exhibitor, Barbie from 2023 in D-Box ticket is better than Indiana Jones. It's better than Mission Impossible, another top movie that we could expect. So yes, D-Box is not just for action movie, it's there as well for a lot of those movies. Then you're seeing Indiana Jones, Mission Impossible, great title, and then Gran Turismo that are waiting, that is starting last week in some area. That's going to be a tremendous movie for us. So another great quarter to have on the ticket sale. In terms of our gaming success development, so definitely we mentioned, and we're happy finally that Cooler Master Chair has been out there. So Martin, yes, we did receive revenue in Q1 from the Cooler Master Chair, and other are expected in Q2 as well. We mentioned we don't provide the detail on revenue, but we said that when we're working with those, when we're talking about 1,000 unit order, really positive review that we did receive. So this was really important to launch that chair, both from gaming manufacturer, both from consumer influencer. This is how it starts. But one thing I want to remember everyone, so what we're saying, we're building that foundation into gaming. As you know, with the price point, this is a product that is positioned for premium gaming, early adopter, and gaming in the commercial market. It is not a mass market volume product at the price point it is right now. But of course, there's more product in the roadmap right now to arrive to that upcoming product. If we move to the sim racing, right, which is a subset of gaming. So we had a lot of progress as well, and we're really happy in the quarter to say that Advanced Sim Racing, one of our partners, has renewed our partnerships, and you can be seeing that we're expecting more than 2.3 million of sales of system through there. Advanced Sim Racing has been built around the last 3 years to become one of the top sim racing accessory supplier, both to the consumer market and the commercial market. So really happy with that renewed partnership. On the outlook, so what are we trying to aim? And Martin, you were saying in terms of visibility, so we are both focusing to grow our install base of theatrical seat, install base of partners, but as well to develop our industry-leading Aptic ecosystem, connecting with content supplier, studio, and other party to stay in the leadership position in Aptic. Secondly, as well, delivering profitable growth. So when David and I pick up that duty a couple of years ago at D-Box, we had that, and we're continuing to deliver. I think we are seeing the trend that we have been building in the last 4 quarters, and we definitely want to continue into that direction. This should be helped. As you know, we had multiple launches in the last couple of months, being the Motion one that we just talked about, the R-Seat and the Mercedes platform, as well as the Track Racer partnership chassis equipped with D-Box actuator. So all things that we announced that will contribute to the growth and profitability in what is coming. Of course, we manage everything. We manage everything we cannot manage. So everything around inflationary pressure, geopolitics, and things like that, we are still cautious to make sure not to jeopardize or to overspend, so we can manage the business and maintain the profitability level we reach. And one thing, of course, that has been on the radar lately is the Hollywood labor strike, which definitely could have it doesn't have for Q2, but it could have an impact on right of rules in the future, or on the short-term financial situation of some exhibitor in terms of buying a new system. So this is something we're looking as well. So again, we're happy with the quarter, Martin, but we're really more happy about the trend we're building around that. reaching that profitability level, and what's bring more nice figure in the future is more business partner that are joining D-Box. So good diversified company. Yes, might be challenge ahead, but we do see a company continue to grow. So that was our summary, Martin. Of course, we'll pick up new things, but happy that for shareholders that the result are good.
All right. Question here. Are you still using artificial intelligence to detect motion cues in films? Is there any chance you can automatically detect motion in the film capturing process, like on the movie set as well, which I guess would enhance the experience and reduce your costs of marking up a movie?
Yeah, Martin, yes. And as I think it was a PR, I think it was 18 months ago, we got a good sponsor from Mailhot to have a $1 million on AI. And yes, the AI will contribute both to the cost reduction part of it, as well to the explosion of haptic content that could be available with our partner. So yes, this is in the go.
And I would think that would maybe be even more applicable to video games, because video games are dynamic. They're not linear in the same way that a movie is. Would that be fair to guess that its impact on the video game market could be bigger than in the movie market?
I would be saying that the first contribution would be what we call on the linear content, movies, series, rides that we're talking, because that's where there's more manual part that is converting. With AI can contribute as well to gaming, but I'll just simplify that gaming is different. We connect haptic to gaming engine and things like that, which are a different way of communicating. So yes, in the future, but short term, more linear content.
Okay. All right. When you sell to the Cooler Master chair, you're selling Cooler Master the actuators, and which then they're assembling and they've designed the whole system, and then they resell that. So you're getting actuator sales of that, not like a percentage per se of the chair itself.
Correct. So the question is true for, I would say, pretty much everything we do. So we're more a B2B2C. So we sell our haptic system, those system sales to a partner, and which that then integrates it into a full product. So we're making that gross margin around that. And in some segment as well, we can have a recurring part as well. So let's say for a gaming chair with the sales of system, and after that, there would be either a subscription mode or a content fee built into the overall sale. So there would be those two components, providing content and system sale. But it is true with everything we're doing in all the industries.
All right. In the simulation and the commercial simulation market was very strong in the last quarter. Should we be expecting, is that sort of indicative of the current state of the commercial transportation simulation market? And what is any outlook or thoughts on what that segment looks like going forward?
So D-Box has been in those two segments for a long time, but obviously, so people in entertainment are using haptic to build immersive experiences in all subsegments of the market. What is happening in the professional simulation that is interesting is, of course, it is proven that the haptic components help improve training, both from an ROI and performance point of view. And in the past, there was either industry that the training had no motion or no haptic. So the opportunity is to put haptic where there was none, let's say for training for a car or for thing like that. And other industries such as the flight, we're talking about CA, those companies were selling $20 million simulation center, which are really important. But now I would say small footprint simulator are getting built so people can train close to home and at a fraction of the price, and sometimes doing 85% of the training before moving on a bigger simulator. So there's a trend into the professional simulation, as we're saying, both on those one, which is a long-term trend. The difference is in the so yes, that thing has been continuing to grow for multiple years. The only thing, it's a different industry, different type of customer, right? Different way to sell. And sometimes some of the project is a longer time in terms of sales cycle to sell. But
All
when
right.
you have them, they're steady because they build their simulator. You don't want to change that. But
Okay.
we could expect growth.
All right. How much revenue does D-Box receive for its components per Motion One chair? What purchase orders have been received so far?
I'll answer what I've got. First, we won't provide how much we get by a chair. What we're saying specifically is as we're working with those volume partners, being Cooler Mastery or other one, they are not able to buy. So as we're saying, those one are in the 1,000 range number of units, but we don't provide the revenue we're making by system.
All right. And what happened to the Razer Hypersense chair? Are they still a partner?
So Razer, as you know, we made the launch at CES, which was a prototype for their premium chair. What I can be seeing right now, Martin, is we still have discussion with them, and we're going to have something to announce, either on that product or something else. We'll put that public.
All right. Question here on your current backlog. Do you have a backlog, and do you comment on the size of the backlog?
The general backlog, we won't comment. Just refer to Daivid. Is there some information that we provide in the public document that you...
We don't provide anything regarding any market for future backlog in terms of footprint or sizes of the order book.
All right. Here is a question from a new investor to D-Box. They would like some clarification of what exactly consists of rights of use, rental, and maintenance. Could you describe what sorts of what that consists of on the revenue side?
David?
Yeah, so it's a fee charged to the exhibitor on a per ticket or other different on the monthly basis. For example, there are different ways to make it work. So it's a right of use. It's when the seat are used within the theater. So we've been charged a royalty for it. And the other terms, rental and maintenance, is just that some exhibitor are renting the chair. So we're getting a rental fee for it. And the maintenance is that we're providing monitoring to those system within the exhibitor. And we are able to charge for that, as well as providing this service of monitoring to the exhibitor.
All right. I'm curious, the Motion One chair and the good reviews it's been getting, is that opening up the awareness with other game manufacturers contacting you, or when you reach out to them saying, yeah, we'd like these games D-Box enabled? Is that creating more awareness of D-Box within the industry?
Good question, Martin. So definitely. So when we said that we were launching the gaming foundation, is going to be taking 3 years. The first thing that was important for us is to put a product that could be sharing, that people want to have the D-Box experience, right? So of course we want to, it was about selling that product, but as you know, sometimes all the technology, you want to have a reference point, and that people you can build another product roadmap. So that we wanted to have influencer review. To your point as well, we did a big trip lately in the Asian market when we met all the gaming chair company that were accounting probably for 85% of the total gaming chair market around the world, to know what could Aptic bring to them, no matter what was the hardware we're going to be selling them, or what's the library of the software content that we could be providing them. So yes, it's been tremendous for us to create awareness, new discussion in the gaming consumer segment, in the commercial entertainment segment, in the professional training segment, when people want to use that chair for desktop training, moving to a small chair, let's call it first experiences to midpoint. So yeah, a great review for that. And after that, it's to build from that first product and have a product roadmap that will encompass many possibilities for all those partners.
All right. And with the racing simulation market that you're going after, that's I suspect a lot of that's been driven with the recent past few years explosion of F1, especially in the North American market, where the Netflix show seems to have caught a lot of new fans. Can you just talk about the simulation market, how fast it's growing, and that side of it?
Yeah, so as you're saying, multiple things. So again, building a foundation, what we are benefiting today is work we did in the last couple of years to move to just selling to integrator, right? About connecting with eNASCAR, connecting with the FIA, connecting with the F1, and all those brands, and even some of the car drivers. So this is really what has been the foundation, because you build trust and reference. And as I remember, the FIA, we have the exclusive recommendation by them for the only haptic system around the world. So to your point, Martin, there's 3 trends. The first one, as you're saying, from all those Drive to Survive Netflix events, the sim racing center are booming. Last year, we announced in the UK the first one. The success has been documented, and there's PR around that, and new locations are to come. So there's multiple racing simulators that are getting built, high-end area, and that people are driving. So has been a tremendous place. Secondly, as well, let's call that high-end racing, people that are building home simulator between 15 to 50,000, right? So this has been a lot of people putting more money around that. And definitely now there's a democratization of racers. So people that used to go gaming on joystick and things like that are crossing with the gaming as a sub-segment. So yes, we have that. And probably all the announcements we made in the last 12 months, most of the $1 million partner opportunity that we mentioned publicly, Track Racer, Mercedes, RC, ASR, has all been around racing, F1 arcade, $10 million contract over 5 years specifically. So to answer, figure are there to prove in terms of sales, the excitement, and the money flowing from partner as well. And more to come.
Are you able, like with the much hyped F1 race in Las Vegas, is D-Box going to be able to specifically tie in or do some promotional activities associated with that?
I'm going to be saying more to come, but D-Box will be connected in a lot of nice places.
All right. All right. We seem to be out of questions here. Are there any final comments you gentlemen would like to make, and any statements before we wrap it up?
Quickly, really happy with the quarter, but I think it's all about the trend, right? As you see, Martin, it's easy to have one good quarter and that fall apart, but I think we have proven in terms of steadiness and trajectory that we are aiming definitely and quickly in the proper direction. So I'm really happy with that. And that's the foundation of what Daivid and all D-Box team is doing. And secondly, there's the financial, and to drive more results, we need to be relevant in the industry. So you were talking about F1 things, NASCAR thing, eNASCAR, connecting with the gaming ecosystem. This, when we do the first thing, don't necessarily bring money the first day, but they're the reason 6 months, a year or 2 years why you build all those things. So really happy with the trajectory. We're not perfect, but I think as a whole, we need to take, I don't know, 8 out of 10 decision, right? And I think we did that. So really pleased with that, and really pleased that people are sticking around with D-Box as a shareholder. We appreciate that. And thank you for having us here.
Right. Well, with that, gentlemen, thank you very much. Great update on the quarter. Again, congrats on an excellent quarter there, and great seeing you, and looking forward to having you back in the future. Cheers.
Thank you, Ron. Thank you, Martin.